The S&P inched out a new all-time high today, closing up 0.27% at 6280.46. The gamma exposure concentrated at the 6300 strike continues to remain in focus for market participants. Basically, ever since the low that we saw back here on Monday, the week has followed a steady uptrend towards this 6300 strike. So we've got 6 trading sessions left in this monthly OPEX cycle. It's going to be interesting to see how the market reacts to this level here right around the 6280 zone. Taking a step back and looking at our daily candlestick chart, when we look at the gamma exposure data, market participants appear to be betting on further upside into the end of the year. So any pullback currently would be viewed as relatively short term and an opportunity to re-enter long positions. We are expecting some sort of pullback here in the coming days or weeks, something in the realm of 3 to 5% pullback, nothing major. And we would view that as a buy the dip opportunity. We actually did roll some of our short hedges up the options chain to higher strikes in order to capture that move. We've talked about this in many of our recent videos, and we're basically just highlighting the fact that we never know where the exact top is, but we want to be protected at least partially in our overall portfolio as we're maintaining premium collection strategies and other bullish positions. And so we want to be able to lock in profits in the case that the market does see some sort of pullback. As we track along this uptrend, the further up we go, the higher the risk becomes to a larger pullback. And we really haven't seen that for the better part of 2 or 3 months now.
Thanks, Anthony. Let's take a look at QQQ, which still has positive GEX. And I mentioned yesterday that I've been watching this weekly whole moving average, currently at 553.01, and how we dipped below that and have bounced back above it so far. And today, even though the NASDAQ was divergent and being down, while the S&P was up, it's still above the whole at 555.45. So roughly 2.5 points higher than the whole. So in my mind, this weekly trend is still intact, and I'm not going to be looking for more downside until we can see that 553 breached on a daily basis. Now, given that we're so close to it, that could happen at any moment. And I think another thing that so far the few surviving bears have to their advantage is that the GEX, while it has grown in recent weeks above 555 and 560, it's still diminishing as you go up the chain. And as you can see, when I flip back to the daily chart, that 560 would also represent a breach of the whole moving average and the upper Kellner channel. And breaches above the upper Kellner channel, they're not typically sustained without some sort of consolidation or even a sharper rejection, much like we expect at the upper dealer cluster zone to be a possibility. So really at this time, I'm still not looking for a powerful move up immediately above 560 for QQQ. Today's candle was certainly left a lot to be desired, even making a slight new intraday low compared to yesterday. So on a very slight basis, QQQ is showing expanding volatility intraday, even while the VIX is still very low, just below that 16 GEX cluster that we're watching.
Thanks, Sean. I wanted to take a look a little bit more closely to the intraday action on the SPX. I've got a 5-minute candlestick showing here with a 50-period EMA. And if we go back to the last week of June, we can see that we came out of a consolidation zone, which we have been basically in an uptrend ever since then. Most of the trading activity throughout this period has been above the 50-period EMA. We had a little bit of a decline earlier in this week, and now in today's trading session, we are again once above this 50-period EMA. And so I think tracking price both on a shorter term and a longer term time frame is extremely helpful. One of the other components that we use is the 0 DTE setting on our dashboard. We're able to filter our gamma exposure data by only looking at the contracts that are expiring today. And this is a post from a trade that we made earlier today. We saw gamma exposure building early in the morning. This was posted at 10:15 a.m. this morning. We saw gamma exposure growing primarily between 62.65 and 62.75, and there was additional volume and gamma exposure building at even higher strikes. And so we actually took this initial pullback opportunity this morning as a long entry point with very tight stops. You can see basically a 5-point stop. And we took advantage of that setup by just selling 5 of the 62.65, 62.60 put credit spreads at $2.70. Fast forward to about an hour and a half later, and we actually were able to lock in $900 profit on those put credit spreads. We close those out at 90 cents. And so this is just a good example of how using short-term indicators along with gamma exposure data, and you can see just how important these levels are as price moves into them, especially in a trending market environment. And by the way, you can track our trades in real time by becoming a member at geeksoffinance.com. I'll put a link in the description below for you guys to check that out.
Thanks. Looking at IWM, which finally hit that 225 mark, the upper dealer cluster zone and the biggest GEX cluster that we felt was also a good target. We see something we've already seen with QQQ and SPX, and that is the whole moving average moving up at a rate of ascent that's likely to soon exceed price unless it continues higher in a parabolic fashion. And so when that happens, it may turn this support into resistance and create a bit of a headwind instead of a tailwind for IWM. So I always like looking at IWM for clues as to where the broader indices might be headed. And so with IWM still holding strong, it hasn't really signaled that it was quite time for the rest of the indices to drop either. Even if we lose the 223.56 whole moving average, we still have this GEX at 220 now that would need to be contended with by bears. So even if we lose the 223 whole moving average, which would flip my bias to immediate downside instead of further upside, we still have GEX at 220 that may have to be contended with before we can see anything more meaningful than a small drop.
Thanks, Sean. Next, let's take a look at AMD. AMD up 4.15% today, closing at 144.16. AMD's been on a huge run up ever since the April 7th low, with a particular breakout right above the 120 strike, and it's really been moving over the last few weeks. Gamma exposure has been growing pretty consistently at higher strikes. Right now, the main target is between 140 and 150. So with the big move up today, we're right in the middle of that target. We hit that level here about a week and a half ago and rejected. You can see this is our upper dealer cluster zone sitting right at the 145 strike. So we had an initial rejection, and now we're coming right back up to that level. And I suspect there's going to be some effort made to get up into the 150 strike within the coming weeks. We see volume coming in at that 150 strike today, nearly 100,000 contracts traded at that out of the money level. And this is a name we were actively trading this week. We recently created a new weekly setups channel. This is for tactical trades outside of our normal portfolio. And I think this adds a little bit of value for shorter term traders who are looking for setups to match the GEX structure on shorter term timeframes. And so we initiated a position back on Monday, July 7th, buying a small amount, 3 July 11th AMD 137-140 call debit spreads for 95 cents. We actually exited those this morning, locking in a $510 profit. So that's more than 100% return in just a few short days. And those are the type of setups that we're looking for. AMD had a big gap up today, and you can see basically from our initial post to today, AMD was finding support off of the 15-period moving average, and look at all this gamma exposure sitting at the 140 and 145 strike. And that's what we were playing for, was a move up into that level at some point this week. So we went ahead and locked in that profit today on the big run up. Going forward, though, I think AMD has a lot of really great prospects in front of it. It does seem like the worst is behind it as it's broken out of this long-term downtrend that it's been in for quite a while. At these levels, however, I think we're going to be a little cautious. There's potentially some dealer selling pressure here between 145 and 150 in this zone. So I'd like to wait for a little bit of a pullback or consolidation, kind of in this zone. Maybe the 50-period moving average catches up on the daily time frame, and we can look for a better risk reward setup down potentially between the 130 and 140 level. So we'll keep our eye on that as the gamma exposure structure shifts and as we see some consolidation. But I definitely want to keep my eye on AMD for potential future trades.
Thanks, Anthony. Let's take a look at natural gas. So I have UNG pulled up. That's our GEX proxy for natural gas. Sometimes when we've traded natural gas, we'll also trade the futures based on the data that we're seeing. I wanted to point out a couple of things that are noteworthy. We reached this lower dealer cluster zone, which had moved lower from 15 to 14, and that happened to be right at this lower daily Keltner channel. We actually see the first close above the whole moving average at 1453. Currently, we close at 1475. So this is the first close above the whole since June 20, when we had that first big red candle. And after that, we dropped below the daily hole, and it's been downhill ever since, even with a couple of attempts to get back above it. So certainly not a guarantee, but I find it encouraging that we're back above the line. And with the hole close to the lower Keltner channel, we may have a layer of support here. It definitely is a trade that takes patience, but it looks like it might be ready for a rebound soon.
And we are running a limited time promotion, $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We have a few spots remaining, but this promotion will be ending soon, so take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, on top of the premium channels in our community Discord. By the way, our community Discord has a ton of great traders in there sharing their own trade setups, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below for you guys to be able to check all of that out. Thanks so much for watching, and we'll see you guys in the next video.